Okay, welcome to the Wall Street Crossover Show, sponsored by Admiral Markets, and with their market commentator, Darren Sinden. How are you this afternoon, Darren?
Not too bad, Zach, but scratching my head about one or two things which don't really make sense to me. But then,
That's the financial markets for you. But even within that strange sphere of human life, it seems to be rather strange, doesn't it?
Yeah, it's a very odd period. It's historically one of the quieter parts of the year, the sort of doldrums of August. Yet there's plenty going on, and there's data coming out which which is not conclusive, but it probably raises more questions than it answers as well. So
well, let's look at some of that data released over the European session.
Okay, so we start as we often do here with some data that came out very late last night, just before midnight UK time. The trade balance in Japan for July came in at minus 268.1 billion yen, so i.e. a trade deficit. That was massively different from the forecast we had of 63.3 billion yen as a deficit, and the prior read of just over 70 billion yen deficit. Now, what's strange to my mind is that they've been helped by falling oil prices, and exports actually outperformed estimates within the trade balance. But if you look at the data and you go back to all the way to mid-2013, they've only had one positive balance in that whole period. So despite some sort of positive headwinds, i.e. a big chunk of their imports being cheaper and their exports at least keeping up, if not modestly ahead of what's been expected, the balance of payments, or the trade balance I should say, is getting worse and worse, and I don't believe that can continue.
So they've got everything. They've got a bad number, even with everything tilted in the
so it would seem, yeah, and a number that's so out of kilter that you have to question where it came from. Perhaps there'll be some kind of seasonal
from China.
Well, perhaps. I mean, maybe this is the read through, but I think we'll need to see, what the August figure is like in a month's time, and whether we get any sort of historical revisions. But certainly that's a cause for concern. An equal cause for concern, perhaps, is the volatility that we're seeing in Chinese equities. Now, they rallied into the close stage of sort of 2% bounce, basically, to finish 1.22% up on the Shanghai Composite. But that kind of volatility that we're seeing intraday now, down 6% one day, 2% range the next day, it's becoming quite concerning. And as we talked about before we came on air, I think China's going to become, as you do, a bigger and bigger headache for the rest of the world.
Well, the only good thing about that is that I suppose it helps make the Greek situation look relatively pedestrian in comparison. So
yes.
Sort of replaced it.
Yep. So if there is a silver lining, it's the fact that Greece looks minuscule in comparison. The latest chapter in the Greek story is that German MPs have voted on and approved the third Greek bailout, despite the German reservations, which Mr. Schäuble expressed, i.e. no possibility of a haircut. Remains to be seen if the final terms, which are meant to be thrashed out this evening amongst EU finance ministers, will be good enough or sufficient to allow the IMF to take part. Assuming they are, then Greece will get 86 billion euros in the not too distant future, or a further 86 billion euros, I should say. And then perhaps the EU and the Eurozone and the ECB can turn their attention to a very disappointing construction output figure for June. It came in to down 2.3% against the prior read of plus 0.3%, and with obviously QE meant to be stimulating the domestic economy, you'd like to have seen
just a massive miss.
Yeah, it is, and it's in one of the key industries that needs to be followed.
Well, actually, that's the one that should respond best to QE.
Yes, it should. Of course, it should. It's exactly what it's meant to do, to stimulate demand in those key industries like construction and infrastructure.
Okay. Well, the next slide then.
Okay, more tales of woe, I'm afraid, and all tying in really to our theme of China and emerging markets. First of all, Glencore, ticker GLEN in London, third largest of the global mining companies by market cap, more of a trader per se than a miner, but it still has significant mining interests. They are trading around 161.2p shortly before we come on air, down 8.46%. The company posted a loss, but more importantly, it lowered its guidance below the no matter what figures that it produced back in March 15, and whether it was a throwaway comment or they were serious, but the CEO said that they would produce somewhere between 2.7 and 3.7 billion dollars of profits this year, no matter what happened in the Chinese economy.
Tempting fate.
I think he probably regrets saying that, and so the market has voted as it often does with its feet, and they're down nearly 8.5% on the day on the back of that. The other interesting point to make is that a lot of early calls had them called up between 1 or 2% because they're capping their expenditure and they were reducing their debt burden, but the sales guidance has dented that. And then another company laid low by issues in emerging markets, the Danish brewer Carlsberg, ticker CARL. These are the A shares that we look at in Copenhagen, trading around 570 Danish kroner this morning, down 8.5%. Tough time for the new CEO, just started the job, and he has to start with a profits warning, and he warned basically over plunging Russian sales and tough European trading, Western and Eastern European trading. In fact, Eastern European volumes, for instance, beer volumes, down 19% versus the comparable period in 2014. So hard times at Carlsberg, and again, they've been marked down sharply by just under 8.6%.
Not a company you really think would be in the front line of any downturns or anything else.
No, because
sort of at least second or third in the hit if there was a economic
absolutely
slowdown.
because of the defensive nature of the products they sell and the sort of usual inelastic demand that you have for beer and spirits. But no. They probably regret getting involved in Russia over the long term, I'm sure.
Right, M&A rumours and movers.
Okay, a bit more transatlantic M&A, and this time it's Motorola Solutions, which is ticker MSI in the US, trading around $65.77. This is a networking business. You might remember the company was splitting to a while back, and Google acquired the old mobile phone handset business. This was the rump of the business. They're going to or are in talks to buy a UK company called Airwave Solutions Limited, and they are a privately owned emergency communications company. Quite a complicated ownership structure for this one, but the principal backers are Australian bankers Macquarie. Motorola is said to be happy to offer around 1.6 billion for Airwave, and it recently, this is quite interesting, it recently received a $1 billion injection from Silver Lake Partners via an instrument called a pipe loan for this kind of deal. What the pipe loan basically does, for anyone who's not aware, a private equity company takes a stake in a public equity business or a quoted business. They effectively issue a loan to the company or who issue debt, which at a later date can be converted into equity at a discount. So Silver Lake are thinking that they've lent some money and they'll get their return on some cheap Motorola stock if all goes well with this deal, and they can expand what Airwave do. Now, Airwave provide dedicated communications services and equipment to UK emergency services, and the key here is that allows secure inter-service communication, so an ambulance driver could speak to a fireman and fireman to the police, and all securely. That is the sort of thing that Motorola would definitely like to look to roll out across both the USA and the rest of the world, and in the USA particularly, secure bandwidth solutions are very much in demand. So it's interesting to note that we've still got some world-leading businesses. Shame this one wasn't quoted, and doesn't look like it ever will be now.
Yes.
But there's still
£1 billion worth.
Yeah, of M&A for the UK. Yeah.
All right, let's look for our US data points.
Quite slim pickings today, but what we have got is very important. First of all, we've got CPI, Consumer Price Index for July. We look here for the month-on-month figure, forecast to come in at plus 0.2%, slightly down from June's plus 0.3%. The other figure that people will watch closely here will be the rolling year-on-year core read. That came in last month at plus 1.8%. So it's not so far from a 2% inflation figure that the Fed considers to be part of the things it wants to look for before it raises rates. Having said that, it's not this figure that the Fed actually looks at. Yeah. But nonetheless, it will serve for sentiment. In terms of where we've been, CPI has been gaining momentum in 2015 after a sharp fall in 2014. But I think we're some way from a convincing inflation number. But let's see what we get this afternoon. Okay. And then staying with the theme of potential interest rate rises, All eyes on the FOMC, that's the Federal Open Markets Committee minutes for July, which will come out this afternoon around 2 p.m. Eastern Time or 7 p.m. London time. And obviously the market watching closely here for clues about timing on the rate rises and any hints about the actual position of the members of the FOMC, how they sit themselves versus an interest rate rise in September or perhaps later in the year, as we believe.
All right, the US pre-market movers and levels.
Okay, well, quite an astonishing move in our first company, Dot Hill Systems Corporation. That's ticker HILL, HILL in the US, $9.69 pre-market, up 87.07%. Why? Quite simply, this manufacturer of data storage solutions, typically for servers and data centers, has received a bid from the much larger rival Seagate, ticker STX in the US. Seagate's more familiar to people, I think, probably for the portable hard drives.
Yep, I have one of those.
That they produce and that many of us owners use.
There's obviously good money in that.
Yes, I think there's obviously good money as well in solid state data storage systems as well, and that's what Seagate are aiming for. And then staying in the world of technology, Analog Devices Inc., that's ticker ADI in the US, one that we've mentioned here on a number of occasions, trading around $62.01 pre-market this morning, up 7.1%. And basically good numbers from these guys. They beat estimates and they guided higher for the coming quarter. And that was unlike some of their peers such as Texas Instruments and Linear, which had previously offered weaker guidance. So one to keep an eye on today, I would suggest. And then in terms of equity market levels, obviously things are a bit weaker here in London, as we said earlier before we came on air, almost a delayed reaction to yesterday's sharp move lower in China. So for the FTSE, we're now looking at 64.31 on the downside, plays 65.23 to the upside. For the DAX, which does look a bit sickly again, it must be said, 10,730 now is our downside level, plays 10,799 to the upside. In the US, 2090 plays 2105 of the S&P. So
a bigger divergence between the US and the European side now.
Yes, absolutely.
All the money's going, well, if there is any money, it's going towards the US.
Yes, that seems to be the way of things. We just adjusted really our levels around last night's ranges here. And in the Dow, 17,470 to the downside, plays 17,570 to the upside, a nice 100-point range to pitch at there. Currency-wise, again, surprisingly static given what's going on in the world. Slightly easier for Euro US dollar, so 110.16 now at downside level, plays 110.71 to the upside. Aussie dollar US dollar 73.30 on the downside now, plays 73.65 on the upside, so that range has again tightened slightly from yesterday. Similar story in dollar yen, no great movements, but we were able to just tighten the ranges to 124.20 on the downside, plays 124.50 on the upside. And in cable, it hasn't managed to recover the 157 level it broke through yesterday. So for the minute, we're 156.51 on the downside, plays 157.10 if we're to make a bigger upside move against the dollar.
But his cable is moving, or has
been.
I mean,
it's
better of the bunch, best of the bunch.
Yes, it is. It's doing something. You're quite correct. Yeah.
Okay. I think, do we have another slide?
One more slide, yeah.
Surprise entrant, late
yes,
entry?
Yes, late entry in focus, what we're watching today. And this is a chart from Bloomberg, just really showing how emerging market currencies have performed since the yuan devaluations of last week. I think what's interesting here, other than just the slant of currencies which have done the worst, Turkish lira, Malaysian ringgit, Russian ruble, Colombian peso, all there in the bottom left-hand corner, is this snippet from the FT that almost $1 trillion US dollars has left emerging markets over the last 13 months, which is obviously a large sum. But I think the fact that it was twice the amount of money that left during the global financial crisis is a sobering thought. Obviously, the reason we're keeping a close eye on this is that the possibility of US rate rises and further yuan weakness could place additional pressure on the EM currencies and their economies. And I think, my views, I think that's very likely to happen. So,
do we know where this $1 trillion has gone?
No, that's a good point. It would be interesting to try and find the other side of that coin. But
a few accounts opened up in Admiral Markets to trade this.
We very much like that kind of exposure, but perhaps I can have a
look. I mean, on the currency, is it sort of a simple currency trade? You think that people are just like
I think
buying dollar?
I think a certain amount of money is probably left left China and has left other economies, yes, as people have tried to move to what they perceive to be the safe haven currencies, the dollar and no doubt the Swiss franc. But there's also, there's also a repatriation of money back to other investments. We said yesterday, overall fund managers are generally underweight emerging market equities, and so their money's been taken out and moved elsewhere. Things like the Thailand bombings, perhaps, that will only encourage that trend. I guess there's also probably plenty of money leaving Russia still as well. So.
Right, okay, well that's it for the Wall Street Crossover Show today. Thank you to Darren Sinden, who's the market commentator for Admiral Markets. We'll be back at 1 p.m. tomorrow.